this company is manufacturing equipment to a very high, to a very high standard of quality. However, it must still provide a warranty for each unit sold. And there are instances where the machines do require repair after they have been put into use. Alright, so what did the company say to you? They said that they started in business in 2027, and then the controller, you are trying to determine, you are the controller, and you're trying to determine whether to use the assurance type or service type to actually account for the warranty obligation. You would like to show the company president how this charge would affect the financial statement for 2027, and then, and considering you're using IFRS, right? So you said you have determined the sales on the account for the year were 1,000 units with a selling price of $3,000. Ignore any cost of goods sold. The warranty for the first 2 years and the estimated warranty is averaging around $200 per machine. The actual cost of servicing the warranties for the year were $105,000. So you've done some research and determined that if the service type approach were to be used, the portion of revenue allocated to the warranty portion would be around $350. So remember, your current selling price is $3,000, right? So that means that they accounted for they wanted to account the warranty separately, or they wanted to account that if they or they want to look at whether they should be accounting it like the service type, meaning the warranty that they're actually providing is actually embedded into their cost, into the selling price. That's what they're saying. So let's take a look. In this case, it seems like they're not offering any. They haven't decided whether they want to offer the warranty as something that they provide to the customers, or they want to be incorporated as part of the cost the customers need to bear. I mean, that's basically what they're saying. Okay, so you need to come up with what the accounting situation is. For the assurance type warranty, then what do we need to do? How much is the sales? They said it's $3,000, right? That would be covering anything they sell. So in that case, you'd be taking $3,000 times 1,000 units, right? Is that what they're selling? Is $3,000 the selling price? So if they're using the assurance type, that 1 year warranty cost is extra, right? So they would be recognizing the full revenue. Is that okay? In this case. So that means that they will be debiting the receivables for 3,000 times 1,000, right? And then they will be recording the sales for that amount as well. Are you okay? Do you have any questions? Are you okay? Then what do I need to do? I need to account for the warranty expense, right? Because I accounted for the sales, I have to account for the warranties. How much is the warranty they estimated that would be costing them to do? How much per unit? $200. So I would take $200 times 1,000. I would debit the warranty expense times the volume, so that would be 200 times 1,000, so that would be $200,000. Is that okay? And then what happened? During the year, they have a claim for $105,000, right? So what do you need to do? You need to take out $105,000 warranty liability and crediting the cash for $105,000. Is that okay? So how much money have you left at the end? So the balance of warranty liability is $95,000. Is that okay? Based on this, right? Do you have any questions if you use the assurance type? Because if you use the assurance type, they will recognize the full revenue because everything is pertaining to the product they're selling. There's no aspect of that would go to the warranty, but then they have to account for the expenses if they do want to offer that warranty free, right, to the customers. But those are the costs they have to account for. Are you understanding the concept? It's a little bit tricky in the way they're actually presenting it. Now, in the case of the assurance type warranty, that what you need to do is the first part. Now they said $350 is to do with the warranty. That means the portion they can recognize of the revenue is the remaining, isn't it? Now the receivable is still $3 million, but then the sales will only be how much? Now the earned revenue portion of it is $350 times 1,000, because now they wanted to account that as a bundle sale, so you're gonna break down the bundle, right? And then the remaining will go into sales. Does that make sense? Is everybody okay? Now then, they said to you that the portion of revenue that you can account for, you can actually take a look at the usage, how much is the claim, over the portion that they have accrued for the warranty, or the unearned revenue, that portion, because of the fact that the claim has come in, then that means that portion of the revenue can be recognized, right? So you can actually take, that's why you take 105,000 divided by the estimated cost, which is $200 times 1,000, so that means that 52.5% of the revenue has been used up, in other words, right? Because that portion of the revenue, that portion of the cost is now being claimed, so that means you recognize that portion of the revenue as well. So from the sake of this question, that means I can recognize the portion of the revenue, that portion of the revenue. Do you understand the concept here? This is a little bit unusual in the way they actually do it, but in real life, that's something you can consider. Because then you accrued for $200,000, but in the previously, we said the total estimated warranty liability I should be accounting for is $200,000, but then they have now come in and claimed $105,000, because remember, this is, you take the warranty to the unearned revenue, right? So now you need to figure out, can I claim back part of that revenue? Then in order for you to claim back part of the revenue, what is the basis? You wanna take a look at, okay, my total warranty provisions, right, to account for that warranty that I'm selling is $200,000. People have now claimed 105,000 of that 200,000, meaning I've provided services for 52.5% of that claim, of that liability, right? Because I've provided service for 52.5% of that liability, I can now recognize 52.5% of that unearned revenue into revenue. Does that make sense? So that's why I can recognize $183,750 into the revenue. Do you understand the concept? So that's why I'm redebiting unearned revenue for $183,750 and crediting service revenue for $183,750. Is that okay? Then the very last piece, what do you want us to do? Because that's the last piece that they actually have incurred, right? This is the cost they've already incurred, so it will be debiting 105 and crediting cash, right? Because so far you have not taken anything to the warranty liability, you only have accounted the revenue, right? That you have to get paid, so that when you incur the cost, you have to expense them. But then the revenue portion can be determined based on the services you're provided based on that warranty that you're liable for. So this is a little bit different in a way. Now, normally speaking, I would be giving you a scenario where the service type would be more related to an extended warranty rather than within a warranty period. So this is a question that's within the same warranty period, right? One, they're choosing to offer the warranty, and the other one, they're choosing not to offer the warranty. They're selling that warranty as part of the sale, which is the second option they're doing here. Are you okay? Any questions with this? Okay, if you have any questions, let's move on, because we have so many things to cover and discuss for chapter 13 is not necessarily a very overly difficult. The thing that makes it difficult is there's so many different small concepts you have to know, right? So far, we already talked about many different concepts. We talked about vacation accrual, we talked about compensated absences, we talked about payroll, we talked about accrued liability, we talked about unearned revenue, we talked about a whole bunch of things already, right? Notes payable, those kind of things so far. And today we're going to cover asset retirement obligation. We talk about the warranties, right? The next topic I want to talk to you about is loyalty program. Okay, loyalty program. So how do you account for loyalty program? What's a loyalty program? Can you give an example of a loyalty program? Any loyalty program you have participated?